Welcome to our webinar. I am Sophie Condie. I'm the CEO of Shieldpay. Our webinar today is we are going to be discussing client money in depth and talking about the evolution and how it has been managed for the same way in decades. The SRA's rules are changing. They're changing thick and fast. As we all know, we're monitoring that closely, and we've been looking at the rising fraud risk and the operational cost of running the client accounts and the processes in the law firms, trying to rethink how they hold and move client funds. We know change is needed. However, knowing how we're going to do that is a different thing. So what you're going to get from this today is you're going to get a clear picture of the driving shift away from traditional client accounts, some practical insights around changes and what that really looks like, and an honest view of the risks, regulatory risks, operational risks, and the reputational risks associated. There's no vendor pitching. It's an honest conversation between some great minds, and we'll be talking that through in a little bit more detail through some questions. So now let's introduce the incredible minds that I have here with me today. Sue, can I get you to introduce yourself?
Sure. Hi, everyone. I'm Sue Bent. I'm a litigator by trade, background, as it were. But probably for the last 20 years, I have run operations of quite considerable scale in consumer legal services, in the main listed and PE-backed. Before my current role, I'm currently COO of Farringdon, which is an AI native law firm. I was COO of Simply Conveyancing, a PE-backed scale conveyancing business. I'm passionate about all things change and innovation in legal, so delighted to be here today. And I'll be talking, really drawing on my own personal experience of being involved in many sort of change projects in legal and the opportunity for change over the last couple of decades.
Brilliant. Thanks, Sue. Over to you, Martin.
Yeah, thank you, Sue. So I'm a corporate lawyer for my whole legal career, which is now nudging 30 years. So I've been in big law. So I was a partner at what's now part of CMS at Nabarro, headed up the capital markets team there, and a firm called McGregor's that is now part of Pins and Masons. But I also ran a boutique law firm for close to 10 years, which was quite interesting in this context. But throughout, and now I integrated that into Punter Southall Law. We're a hybrid part traditional law firm where you have employed lawyers, and we're also part consultancy driven. So we have certain that's my role there. Sorry, is Chief Commercial Officer, helping with the growth of the firm. But I'm also very much still a frontline corporate partner. So I have all the needs in terms of client needs in terms of relation to a client account.
Brilliant. Thanks, guys. It's really good to have you here, and I've really enjoyed all of our conversations around this already. So let's kick off with some questions. For the first one, what's the biggest thing that's changed about client money over the last 3 years? So Martin, could you get us started with that?
I think it'd be hard to say one single biggest thing. I think if you had to say, and I'm not going to be disparaging about the SRA, it is a very challenging space, but I'd say the way the SRA has come to life in recent years, because of, I'm not saying it's all reactive, they're not to blame for everything that went on at Axiom Inc, but now they're actively promoting and actually encouraging firms to really look at client money strategically. They're advocating, and I know it's not a vendor pitch, but they're advocating alternatives. I'm sure anyone watching this who's a lawyer will be familiar with a lot of legal debate about use of client account interest, use of client funds, third-party managed accounts, which a lot of lawyers did not know anything about. You know, something that came in at the end of 2019, a well-designed set of rules. We'll give the SRA a lot of credit for that. Well-designed, simple set of rules. They didn't see it as their job to promote it. And I think I get that. I'm involved with regulated businesses regulated by the FCA, and the FCA doesn't typically go around saying we advocate certain suppliers. So I think the biggest thing that's changed is the debate, is the alert. I think firms who perhaps not necessarily asleep to the issues, but the operational resilience, the focus on operational resilience and its intersection with holding client funds. I think a lot of firms felt it's an accounting team issue, which is much more strategic now. It should concern management teams. It really is. right up there in terms of your risk management of a law firm.
Yeah, I think you're
I'm
right.
not sure that's answered your question.
No, it has. It has. I think it's certainly triggered the conversation, right? Because I think you've mentioned a fair amount, but I think leaning into the SRA consultation and the changes in that areas more so over the last couple of years. I think you're right in that kind of statement. Sue, have you got any more you want to add to that one?
Yeah, I think, I mean, I suppose drawing on my own personal experience, I've spent quite a lot of time advising PE funds and investing into legal services. So the contribution of client account interest, for example, to margin is something that in that environment you're looking very closely at, as you are also looking at what are the levers for value creation within a business. Which then takes you back to Martin's point around strategy and the direct relationship between how the operation is managing client money and all of the related processes, the cost of doing that to the business, how it impacts on customer experience, what the optimal customer journey should be, whether that's a corporate client or a consumer client. And really the opportunities for change that are going to create value for the entity. So I think that certainly in the world that I have lived in for some time, this area is part of really looking at the strategy for a law firm and what opportunity there may be to do things differently to benefit experience, to benefit margin, to reduce risk, to create value overall.
Yeah, really, really good valid points there. And I think you're absolutely right, having that holistic view across a law firm. Where's the value points? What is it that they need to be doing, and what's their strategy surrounding it? So building on that even further, there's roughly 9,000 law firms in the UK, and they're all still running traditional client accounts. Martin, I'll come to you first. What's keeping them there? And I know, some of our discussions have covered inertia, risk aversion. Is it that the case for change isn't strong enough yet? Is the urgency not there? Like, what is it that you think is kind of keeping them with that mentality?
Yeah, it's a good question, and I've not been involved in my career in a real volume business, but I have been involved, like most of us, in moving house at that end, and have been involved in big law firms and involved in, as I said, running a boutique. But I think there's a lot of convention in that, if you looked at the whole history of running a client account and the security and confidence that the public has to have in lawyers, and even right down to solicitors' undertakings, without making this too technical, but solicitors' undertakings are the underpinnings of lots of transactions, because without them, money can't move. But so I think there's a lot of convention, but I think that one of the things that worries me that's come out in more recent years, and it's surfaced, or the discussion has, through the debate around client account interest. The law firm should not be making money out of running a client account. That's not me being, sanctimonious. I just think that's a wrong incentive. And if part of your profit and loss, and I won't name firms, but there've been some firms that have been in the press where it's been reported, but for interest made on client account, they would have been loss making. And that's got to be wrong. That's got to be wrong at a fundamental level. Now, I'm not saying that's keeping the majority of those 9,000 firms in that space. I'm not saying it's that, but I think that features some firms. If you only have to read the Legal Gazette. There's been misuse of client account funds, sometimes in a cash flow sense, which again is wrong. But I think I think it's fear of change. I think there's infrastructure. I think there's lack of knowledge. I think that knowledge is changing. I think, to be fair to the SRA, I think they're promoting alternatives. I think, law firms, I think, the infrastructure of a law firm, if you think about it, the more sophisticated systems get in terms of movement of funds, the more sophisticated fraud gets through AI and infrastructure systems. So I think you've got a little bit of chicken and egg with some firms. Why is the fear of moving, fear of change? I think there's a fear of change rather than a fear of missing out. So I think it's a kind of maybe better the devil you know. This is what we've done. This is what the client expects. this convention. You know, as an M&A lawyer, I remember in the first year of running a boutique, we didn't have a client account, and we found a TPMA, and that was good. But I was doing certain transactions. We actually even had one lawyer say to me, we were sell side. So the convention in M&A is that money moves between solicitors, and a sale and purchase agreement will actually say a buyer's duties are discharged in terms of payment once it transfers funds to the seller's solicitor. And I was pointing out to them, we didn't have a client account, so the money's had to go between principals. And one lawyer told me it was illegal not to operate a client account, which it's not. So I think there's also, I think there's what's the word? There's myths, and there's a kind of maybe everyone's taken it for granted for so long in traditional firms that you don't step back and think, why are we doing it like this? Why are you still doing this? Why is Friday, if you're running a big conveyancing team, why is it manic? Why is it all absolutely everyone's tearing their hair out? And actually, we'll get on to check, but you know, if you've got a system whereby that's all set up at the outset, there's a specialist firm that this is what it does day in, day out. Because even your legal accounts team, even the big one, it's not all about moving client money. You know, they've got a lot of other things to do. So I do think a lot of I could ramble on, but I do think a lot of it is fear of change, and that may cause its own issues, problems.
Yeah. I mean, you pulled on so many things I hear on a daily basis, you know, with customers and prospects, where certainly things like misconceptions around options, I think is really powerful. I think one thing I will, and before I come to you, Sue, on your views too, one thing that you said that I think is a really powerful point, but one we should perhaps discuss and kind of bring to the forefront is the interest piece, because you know, if that is a law firm's business model, and I appreciate your statements, and you know, and I appreciate as well the rules around this, but if that is your business model, that revenue is brought in to the business through that, how do they change from this? You know, the change there becomes even harder. So I think that's something else we could lean into. Maybe Sue, if I come to you on your next piece, and then Martin, if you've got anything more to add on that area.
Well, I do feel strongly about that, and I think so. It was David Lammy's suggestion about interest on client account going into a kind of pot that might even help do up the crumbling courts and all that stuff. You know, good idea on paper perhaps, but I think massively underestimated the complexities. But also, you know, I read the Gazette most days, and if you read the commentary on stuff, I mean, firms were in an absolute blind panic about that again, and that should be alert any regulator to, if there's a leaning by too many firms on that reliance on interest, that shouldn't be where your profit margin is. Now, I don't want to cast aspersions that it is for too many, but the fact that the profession was so up in arms about that, I found almost a bit shocking, you know, because I think where the debate's moving to is, I think if you're the senior management in a law firm, I think you should be asking yourself, should you carry on managing a client account? Is that where the future lies? You know, but so yeah, I think is that a systemic problem for the profession? Possibly parts of it, and that may go to other factors. Sue would be far more knowledgeable on conveyancing and some of the higher volume, and that'd be fascinating to hear about. You know, where private equity goes, they believe there's good margins to still be made, and that's not said critically, meaning private equity have shown they've led the way in lots of areas. So when their interest in law, which has been more and more acute in the last 10 years, would you say? So, you know, and they can drive improved systems and efficiencies, which a lot of traditional firms just can't do. They're just not equipped for that.
Well, I mean, there are, I think, as Sophie said, there's numbers of points and kind of key themes to pull from what you've just said. I think what I'd like to talk about is just going back to strategy again, and this resistance to change, lack of knowledge. On the last point around kind of private equity investment into legal services, what does it mean, and what could it mean for this question? I think one of the insights perhaps to reflect on is that you know, when private equity is valuing a law firm, they are not applying the same multiple to the interest element of EBITDA. Like, it's, you know, it's not like they're saying, oh great, this is the profit number, you know, we're going to look at X times, where that profit number is full up with interest. You know, the position is going to be taken either that there is no times on it, or it's very materially less because of the points that, you know, we're talking about here. Is it sustainable? What's going to happen? It's variable anyway. So, you know, to me, that goes back to your point about, in reality, client interest is not a strategy. We talk about it being part of the operating model, but I think that when I look at this challenge, I keep coming back to, does the business have a strategy, or is all of this an accidental and learned process, historic process? Nobody's had the time and the bandwidth to stand back, and I do also think there's a lack of knowledge around what the options are. You know, and also, you know, frankly, in many businesses, perhaps the capability to stand back and have a look. And what I mean by that, and I don't mean it in any way disrespectfully, is that, and here I'm reflecting on my experience in consumer legal services, where, you know, round the board table, you are working with, you know, executives who are, who come from a background of, you know, CX in consumer, you know, they're not lawyers. And that obviously is also very typical in a private equity environment, where, again, around the board table in a PE-backed legal services business, you're going to be drawing on the capability and the talent of people that are not all from the legal sector. So for me, you know, there is opportunity around this challenge. What is right for each law firm, for me, is very much dependent upon what its strategy is. And if, to your point, Martin, you know, interest is something that a firm is existing on, I would question if they have a strategy at all. So that's really, for me, kind of where you need to start.
Yeah, I think that's such a good point. And also the other piece that we've touched on as well is that because it's a learned way of doing things, and I think in the types of transactions that the law firms are supporting on, they're complex, they're gnarly, they're critical to a matter and a project, but they're the most trusted institution as part of that transaction. So therefore, it's been a given over the years, and therefore it's not really being challenged. And I think if we I'll just sort of build on the question a little bit. If you bring it back to the consumer, if you bring it back to the customer who's trying to move millions and have a complex transaction happen, of actually any value, it could just be complex in another way. And it's moving it through an ecosystem or an infrastructure that's not really designed for it, but they don't necessarily know what other options they have, and therefore also internally within the law firms, to your point, if they don't know what the options are, I mean, that's probably a different question, because which we can come on to a bit later. But coming back to the consumer, do you think you can still offer the same service to clients and consumers but not use a client account? So building on some of the experiences that you've been through, would there be an impact to the service overall, do you think?
I think it comes back to I think it's, so I'm saying I think a lot. I mean, it comes back to you know, what is the process and the experience that's right for your business, and determining you know, what is going to be optimal, what the trade-offs are. As a matter of principle, I cannot envisage that for a certain type of business, in certain scenarios, that TPMA is not a better option for some. But it's really going to be business and profile dependent. I think, going back to your point about what's stopping businesses looking at this in more detail, I think that, you know, it has to start with understanding what the options are, a deep understanding of what processes are currently within a business, and And then what is the driver for change? So, I mean, I raise this point because of, you know, particularly Martin's reference around kind of this, the fear of change. What in our collective experience might we say are the core drivers for change in legal services? For my part, my experience, again, predominantly in consumer legal services, is that law firms have been forced to change rather than having taken the initiative to change. I think that now we're seeing, you know, new breeds of law firm. Technology is enabling lots of different opportunities. But what does that mean for the kind of traditional kind of practices that we know of? When we look at the history of consumer legal services, consolidation was driven by margin pressure, regulatory change, customer demand. Businesses in that sector had to consolidate. They had to optimize for efficiency to preserve that margin. What's happening in big law now, in particular, if we just look at the impact of AI, is, you know, firms are finally starting to kind of look at what are we going to be doing about the billable hour. In my experience is that something significant has to change to push law firms to look at options, but that doesn't have to be the only way. The better way is to consider what your strategy is, and then, for example, on this topic, what is optimal for you and what are the options?
Yeah, definitely. Martin,
No,
what's your view?
Yeah, no, that's really helpful. So, I mean, to your just the first bit of your question, I think, Sophie, on can firms operate without a client account? In my experience, and I'm speaking principally as a corporate lawyer, but so I might be involved where I'm acting for multiple sellers, and I've used the third-party managed account multiple times. It's just been, what's the word? It's all been highly efficient. I've had a confidence it's secured. So I'll give you a quick example. We moved 200 million through an M&A transaction. We're involved in multiple sellers, but we, right at the outset of the transaction, so way before completion, we'd done with the specialist firm providing the services. They'd already onboarded the client. They'd done all the AML on top of what we'd done. They did what we'd call, I don't know if people call them dust payments or simple test payments so the channels were all used. And then, because there's always, when you're doing, nearly always, when you're completing on a transaction, it is a bit like where you're completing on a house purchase. There's always a bit of running around. It tends to be late in the day. Can you get money out the door? But so in my mind, and I've used the payment, there's other options. There's escrow services and there's paying agents agreements. And one of the things I like from a compliance point of view, although I'm not a compliance person, because law firms can get caught in the traditional client account where you're making multiple payments to third parties, and corporate lawyers can be not rogues in a bad way, but they'll feel like, oh, it's part of the deal. I've got to use the completion proceeds to pay X and pay Y supplier who you've not. And if in this day and age, if you're going to do that, you can do it, but you've got to actually onboard those third party suppliers. And for me, I'd stay a mile from that. But if we've got a client with that need, a paying agent agreement, they can handle all that. And these things are now, I think one, they're much more affordable and manageable. And I think you've got true specialists with specialist infrastructure that have their own separate authorization, have their own regulation. And it takes it, you know, if I had a client hat on, I'd be quite happy with a law firm telling me that, right, we use this big specialist payment services firm. That's our tried and tested model. So yeah, I think I don't see why across the spectrum of legal services, I don't do probate and wills. I don't do a lot of areas where a lot of the public who are not involved in commercial law engage with lawyers. But I can't really see in my mind why the same principles wouldn't apply. I mean, if I'm moving, you know, if money's going through probate, again, that's a highly sensitive time, isn't it? Not just for the emotions of the family, but, you know, there's a massive amount of money moving for individuals and people. So and an object again for cyber attacks. You know, any movement, this is of money, of funds. That's what the AI and the cyber criminals have been targeting, and it's very, very sophisticated. I won't go the whole way there, but I was on the receiving end of an attack many years ago, and I would say it's probably the most stressful time of my legal career, what happened. They got into our systems. We weren't even moving client money in that transaction, and they deceived the client into moving money to a false account. So I'm well aware of how scary it can be. And that was, we had good IT systems, leading IT systems, and they still managed, they crept into the system. And so that I never wanted to happen again. And it won't, in terms of how we are set up.
Yeah, that's such and having that personal experience to pull on it's definitely an awakening moment, right? And I think having, the system set up in a way that can protect against as much as possible. And to the point that you just said, I think we touched on it throughout, and I'm conscious we'll move on to the next question, but the sophistication of fraud, the sophistication of demand and need in this space as well, the immediacy of payments, the safety and soundness of moving the funds, like it's just getting more and more higher demand, more sophistication, and then also just the ability to be able to do this in-house is getting harder and harder. One of the things that I'll move on to, and then we've had a few questions in as well, so I just wanted to bounce through those. But one of the things that I'd like to lean into is around this strategy piece, because something that I hear really frequently from law firms and people that I talk to is they do have the desire, and we've all touched on this, there's a desire to make change, but how do you get it prioritized? And also, how do you influence that strategy holistically? So I guess a question could be posed as if your CFO, your managing partner, and I suppose we can talk about who the audience should be, but they want to modernize, they want to move forwards. What's your top tips to aid that movement of strategy, to engage the law firms? Because we all know law firms aren't structured as a typical business is. So how would you encourage that, or not encourage that, that's the wrong word. What would be your top tips on that strategy piece?
Mine would be go wide with your audience as a starting place. So I think so my experience of how strategy is set in legal services business has been quite varied. A lot of experience of top down, but also some really great experience of inputs, percolation, consideration, dissemination, or engagement before dissemination. The bigger the law firm, the more removed management, senior partners may be from the coalface. Equally at the coalface, people can be in a silo. And I think it's really important when you're going through a strategic process to understand what the business as a whole thinks are the challenges and the opportunities for the business to tackle. And like any change process, back to Martin's point around fear of change, it's really important to engage a business in a change process, so that people feel that they're, clearly involved and participating in the change rather than having change done to them. And again, coming specifically to this particular topic, and back again to Martin's point about fear of change, and lack of knowledge. It's quite possible if we just take payments that across a business there are lots and lots and lots of challenges, one needs to kind of unearth what those challenges are, and what opportunities there may be, to have inputs into what the strategic threads might be. So my kind of key tip is embarking on strategy involves sort of getting the right people, having the right conversations before moving on to definition.
Yeah, I think they're really well put points to those, Sue, because I think that executive perspective, as you say, not even just in a really big law firm, but I think you're right, can be quite removed from, and because I'm still frontline partner and all that, and I know what can only speak for corporate partners, sometimes the frontline partners can be quite difficult and have a mindset that that is very fixated. So if they don't feel management's engaging and it's just like you're saying, imposing, then that's not a good place. But I think you're right on the strategic side. But if I was having to not so much sell this, but introduce this and why we think that, but have that wide conversation, I think it should be client driven at this point, not historic reasons and convention. And what the clients care about, they care about security. They don't care if it sits in the client account. They don't care if it sits in a TPMA. They care about security and transparency and the efficiency. Of course, they want all that. And they have a lot of that. Where you have long-standing client relationships as a solicitor, you often have a lot. You're often, it's corny and cliche, that trusted advisor, but there's a huge amount of trust in solicitors, like from clients, and we should use that trust to actually, if a firm is saying, look, if this is in your interest, it's why we're introducing this. It's another layer of protection in a world order where the threats everyone, you don't have to read the paper, the threats to money transfers and the sophistication of that is why we're pushing to change. And I don't think changes will be so dramatic that the lots of firms say, forget it, we're not running a client account. But I could see firms, and I do know firms, are looking at how they use that client account. Some are also using TPMA, and there are different practices in different. I've got ex-colleagues who do quite a lot in private equity, and I know there's some firms choose, they have a policy in certain transactions, they will not accept money going through their client account, and that's principally risk driven, not about there's anything wrong with the provenance of the funds or anything like that. So yeah, but how would you introduce that? I think lawyers can be quite stubborn, and I think you have to have an angle that is credible, and that your frontline partners, at the end of the day, don't get me started on whether partnership's a good model for running a law firm, but all partners think they've got a say in everything, when you just can't work that way. The executive is there for a reason. Sorry, Sue, you're going to say.
No, sorry, I didn't want to. No, I was just saying, I was reflecting again on your sort of, fear of change point. In my experience, and being a lawyer, as you are too, in my experience, lawyers can be a bit sheep-like, with the greatest respect too. So they see one firm doing something, or they see, sort of one client profile keen on something, and in the kind of education knowledge piece, it's pretty critical to have good examples of where the benefits have come, and why it's been beneficial to the client, because fundamentally, back to the kind of strategy and engagement, and who do you need to be talking to first and foremost before the rest of the business about strategy? Your clients and what they want. And I wonder whether any law firms have had conversations with their clients about any providers that they do work with, other law firms, for example, where they're using TPMA. Very often law firms just don't have conversations with clients about what clients would like, and the challenges that clients have, or good experiences that they've had elsewhere to learn from to inform their own strategy. So I think, the knowledge piece, kind of making sure that the kind of industry understands the good stories about TPMA. And to your point earlier about consumers, I mean, for those consumers that have been in the locale of law firms who have gone to the wall around client account management issues, and again, to your point around, law firms being trusted, I wonder what they would say about alternatives for their money. When they are, engaging with law firms, they probably look at it quite positively because of the concern around trust in some areas.
Yeah, absolutely. And I really like that point you made, Martin, a moment ago, about that extra layer of security. And actually we get the question a lot around maintaining that control or managing those things and not letting go. And actually we need this in-house. But actually, I think reframing it and repositioning it, that there's another layer of security you can put in here without losing control, without losing anything. You're actually adding to these options and capabilities. And I think that everything you guys have touched on here is super powerful, in that kind of real debate around change and how do you prioritize it and how do you drive it forwards. I'll finish on one question because I'm cautious of time, although I would like you guys to sit and chat about this for hours and hours and hours. And Martin, you may have given us another idea for our next webinar on the structure of law firms. That could be fun. But yes, so if I just pose you both with the final question of just one Well, you can have up to 3. Okay, so between 1 and 3 practical steps that can be taken by anyone listening to this to drive change, to get moving, moving forwards with client monies, looking at the options and driving change within their organisation. What would they be? I'll come to you first, Martin.
That's a good question. Well, I think when if you've been operating a client account for a long time, looking to move away from that in part or in whole, it is a really big decision. There's no doubt about it. If you're a firm that has that functionality need. So if I was looking at alternatives, I'd set it up in a sort of procurement sense, look at the providers, look at, maybe it's the corporate lawyer in me. I'm big on doing counterparty due diligence in all its forms, but look at the providers, look at what the regulation is. And on the provider front, I mean, that's another factor. There aren't that many. There aren't actually that many. That's another factor. So I would know the market, understand the market, try to talk to people who've used it, their experience, a bit like Sue talking about, engage with the clients as well. But I think you have to get your own knowledge base to a level of what the alternatives, how you would transition to that, and probably and have that sort of mini strategy around that. But I would be in the field. I mean, I first came across TPMA when I was at an SRA event, and I don't go to that many, not because it's not really my role. And the person, I probably told you this before, Sophie, the person who leading the event was very good, and they were partly speaking to TPMA, but the chap said, stop managing client money to the room. I think he added when you don't need to, because he had at that point he had something like 2,000 cases of technical breaches of client account. Not even no one suggesting fraud, but we all know that it's a really complex. I used to hate operating a client account. I'll be honest. Well, because you can so inadvertently trip over technical issues, like you've got FX related problems that you can have to self-report. And anyway, so that's how I came across. But when I did, in that audience looking for me, there was a firm there who I subsequently engaged with, did my own checking out of the provider they were using. So I would get to know the market, and you can't sell something if you're not convinced of it yourself. So if you actually really do your work in research and feel this is a true alternative, that would be my starting point. Sorry, that's not 3.
No, it's fine. You did 2. You can you win. It's fine. But also I'd add to that, because I think when you have definitely told me that story before, because it is a good one. But I think the thing that always struck me about that story, about that SRA conference, was that was 10 years ago. And again, it's like, we need the time is now. Like, it's been a problem for a long time. And the other thing I would just add to your point, you're absolutely spot on, understanding the problem, understanding the options and so on, but also not to boil the ocean, step by step, one in front of the other. And to the points that you both have made through this, it doesn't have to be a big bang. It doesn't have to be something that's very overwhelming. It can be staggered and staged as well. And there are options at every stage around policy, process, full TPMAs alongside your client account. There's loads of that really good stuff, but understanding it and actually just spending that time is a great point. Sue.
I mean, I very similar, perhaps with a slightly different lens. I write your own business case for change would be my advice. I mean, you're absolutely right. Any change doesn't have to involve boiling the ocean, but having a really clear basis for an understanding of the impacts of the financial implications, the client implications. Again, just reflecting sort of, my background, certainly over the last several years, in a PE-backed environment, you are focused on business case. What is the business case for doing this? How am I creating value for the business and affecting this change? But that's just a very basic commercial business management principle. What am I proposing? What are the impacts, and how is that going to impact the business in the context of value? So start with the knowledge, start with understanding the options, think through, and also I think don't be concerned if you don't know the answer, and ask around, engage, reach out, do the thinking, percolate, be curious, and have an open mind. which I think a lot of lawyers, we tend often not to have an open mind because we want certainty and we're not uncomfortable with ambiguity and change and uncertainty. So try and write the business case, but try and keep the curiosity hat firmly on and see where it takes you.
Thank you so much. It's really, really valuable time. I hope everybody's enjoyed listening to this, and we'll catch up again soon.
Great, lovely. Thank you.
Thank you.
Cheers.